Nigeria Securities and Exchange Commission, the S.E.C, and the African Development Bank have commenced the implementation of the regulatory capacity improvements under a risk-based supervision framework and capacity building project. Now, the project funded from the AfDB Group administered Capital Markets Development Trust Fund is to finance the risk-based supervision framework implementation and capacity development project. So we're going to be joined right now by Mr. Rotimi Fakeyejo, who is an economy and capital market analyst, to discuss further about this. Good evening to you, sir. Thank you so much for joining us.
Good evening.
What are the key highlights of the risk-based supervision that the S.E.C is pursuing in partnership with the AfDB?
Well, what we're seeing right now is basically being on stream. There is really nothing new except for the funding that African Development Bank is providing. And as such, I believe the basic thing that we are looking at is the capacity building for every for the Securities and Exchange Commission to be able to at least do this, take up the supervisory role for the risk-based factors which affect each of the operators in the market. Depending on the risk that they carry, the risk that broker-dealer carry is different from that of fund managers. The one for the legal practitioners is different from that of the registrars and all as such. So what is the basic thing that we are looking at presently is actually highlighting and ensuring a better supervision, monitoring, enforcement, if the case will be, for the Nigerian Securities and Exchange Commission, having the oversight role on the various operators within the market.
Excellent. Excellent explanation there. Thank you for that, sir. Now, how would this partnership strengthen the oversight capacity of the Securities Commission itself as a regulator?
Well, I think basically before now, the incapacity they may have to do with the fund available for them to be able to carry out this kind of oversight. I know fully well that every support that comes from here and there will always add value to whatever they are doing. So with about $400 million coming from African Development Bank to support this initiative, which has always been the arrowhead of what Securities and Exchange Commission does. And I think basically at this time, it's going to make Securities and Exchange Commission a better regulator, being able to carry out its oversight functions, and also giving us a better market at the end of the day.
Great stuff. So what would the new risk supervisory focus mean for market professionals like yourself?
Well, I think our Securities and Exchange Commission has been doing very well in terms of the supervisory role over the broker-dealers in the market. And for now, I think the areas that the market may actually really want more supervision and enforcement, if necessary, will be with the quoted companies to actually look into their figures, get more professionals that will do that for them, and at the same time, be able to at least mitigate a lot of situations we have seen in the market in the last 2-3 years.
Great stuff. Can you tell us about retail investor protection framework under a better risk-based approach to regulation?
Well, I think if the risk-based framework is actually in place and enforced as it is, then definitely issues relating to investors losing funds or their investment will definitely be nipped at the bud. Over the years as well, Securities and Exchange Commission, in conjunction with Nigerian Exchange, they've really done well in that particular area. So what we are going to see next now is a situation whereby that will be enhanced, and at the end of the day, we're going to see a much better market, which is always the pursuit of the Securities and Exchange Commission as the overall regulator for the Nigerian capital markets.
All right, great stuff. So how do all these fit under the existing 10-year capital market master plan that is already underway?
Well, I think the 10-year capital market master plan has been there, and they're supposed to fully implement all they need to do by the year 2025. So there are about 90 initiatives, of which about 55 have been fully finalized. But for now, for the remaining ones, I believe it's going to really help them to actually do much better. But one thing that is very basic is that the capital market plan for the 10 years that Securities and Exchange Commission has for the capital market is actually going on very steady, and the ones that have been carrying out have been very successful. So I believe that this is going to help them to have a full implementation by the time the 10-year plan, the 10-year expires.
Excellent stuff. I just want to follow up. As the market expands in depth and say there's more products added, options trading, call options, put options, and so on, is the regulation able to keep pace with new innovations that come into the market?
Well, I think for regulations concerning the derivatives, the regulations are in place, but the kind of response that we expect for participation in derivatives has been very low. So I believe with the enforcement, the supervision is not what is the problem, but actually better education of investors as regards derivatives in the market. So I believe for the market to be better deepened, there is need to also deepen investors' education. And I think the modality with which they have been doing it, I think they need to fine-tune it and also bring up new ideas that will actually help them to be able to achieve this.
Great stuff. What's your outlook on the markets for the remaining? I mean, we had a good week on the NGX this week. What's your outlook?
Well, for the week just ended, it's better than the week that we last had. Last week, about 8 billion naira value was traded for the entire week, but for this week, we traded about 12 billion, which is about 50% higher than what we did last week. So, coupled with the fact that the Osher index also moved up by 1.83%, bringing the year-to-date position to 1.85% negative. And I think with this, investors are going to be better encouraged because there is sustenance of value. So my outlook for next week is that we're going to have a much better week, and I hope that it will be much better than what we have seen this week in terms of value traded, volume traded, and also the change in the Osher index and market capitalization.
Do you care whether that's driven by foreign investors? Because it looks like domestic investors have been the one carrying the load so far.
Well, incidentally, the market in the last 4-5 months, participation of foreign portfolio investors has been as low as 20%.
Wow.
And it's not getting better anyway. So what we are seeing in the market right now is actually local participation. And I think that should be broadened to a great extent, so that at the end of the day, we're going to see a situation whereby even when the foreign portfolio investors return to the country, the usual shocks that we usually obtain from them, if those shocks should come around, the local investors will be able to, we have the capacity enough to actually absorb it. So the fluctuation, the volatility that's always trailed participation of foreign portfolio investors will be bring to the barest minimum.
Great stuff. I know the exchange ended up by 50% last year. There's no way we see that this year, is there?
Well, I don't think we can rule that out yet.
Okay.
Because if we see very good participations from the high cap stocks, the likes of MTN, the likes of Airtel, the likes of Dangote Cement, the like of Boa Cement, and also Nestle, and also the banking sector stocks, which are most likely to do better than what we saw previously. I think even if we don't get 50, we should be able to at least get 50% of that.
Great stuff. Mr. Rotimi Fakeyejo, Economy and Capital Markets Analyst. Very good talking to you this evening, sir. Thank you so much.